What if I told you that each one of these 1 hour candles can provide you with a trading opportunity? You can trade literally every single 1 hour candle here and make shit ton of money. Now, if you are someone who thinks that this strategy has a 100% win rate or a 95% win rate, I suggest that you leave the video right now, because trust me, bro, I'm not going to entertain you. I am not the right person for you, because I'm not here to sell you a fake dream. What I'm about to teach you right now is a gold trading strategy. And by using this strategy, you can find a trading opportunity in each one of these 1 hour candles. So you can take trades with all of these candles, but this is not what I suggest. You have to choose one candle per session. So this could be one candle from Asia, could be one candle from London, and one candle from New York. Okay, 3 trades maximum per day. Now, you need to understand, guys, that every candle here has a wick either to the downside or to the upside, to the downside, to the upside, to the downside, to the upside. Now, this is what I call, these wicks usually is what I call manipulation, because after a wick is formed, price goes up and closes around here, which is, in simple words, accumulation, manipulation, and distribution. What is accumulation, manipulation, and distribution? Accumulation is a phase where price consolidates. Manipulation is when price sweeps liquidity, and distribution is price distributing to the upside, right? With that in mind, you can utilize every single 1 hour candle. So let's get on to the strategy, and let me explain how this works. Now, this works with gold and NQ. So you can take 3 trades per day and use the 1 hour candle power of 3. So this right here is the 1 hour candle. Okay, so you can notice that this candle has a wick and then a body closure up here. So we went down first and then we closed back up. So that is a bullish candle. Our goal here is to get an entry somewhere around here so we can utilize the entire move to the upside. So the strategy is simple. First thing first, as soon as this 1 hour candle opens, you want to mark out the opening price for your reference. Okay, once you have the opening price, now you want to look to the left side of the opening price. Okay, so this is the open, so let's just go here. Okay, so this is the opening price, right? And let me just do this. Cool. So this is the open. Look to the left side, okay? And you want to go on to the 5-minute time frame once you have marked out the opening price, okay? And where did the candle go, bro? Hold up. Okay, so you want to mark out the 5-minute high and 5-minute low, the closest high and low that is there, okay? So this is the opening price. Look to the left. We have the high, we have the low. Now, after the candle open, you are waiting for price to either sweep out this 5-minute low or the 5-minute high. And this low and this high are the most recent highs and lows that were formed before the candle open. So this is the open, this is low, this is high to the left side. Now, after that, what you're doing is waiting for price to sweep out either the low or the high. So in this case, we swept the low. We have the open here. We open, we go up and down, and then we sweep out that 5-minute low. Now, afterwards, what you want to do is you want to drop down to 1-minute time frame. So we go from 1 hour to 5-minute to 1 minute, okay? And on the 1 minute, we are going to look for our entries. And this is what it's going to look like, right? So let's say this is the 5-minute low, right? And when we are on the 1 minute, we want to see price sweep out that low, and then we are waiting for a market structure shift, okay, on the 1-minute time frame. Once you have the market structure shift, you can take your entry at the retest of the breaker block or an auto block or a fair value gap, and then you can target the standard deviation projections. And let's talk about standard deviation projections. Now, this is an extra confluence that I use, okay? So first thing first, wait for liquidity sweep. Once you have the liquidity sweep, you want to identify, let's just do something like this, okay? You want to identify the most recent market structure shift that happened before the candle opened. So this is the open here, right? This is the open. Look to the left. This is a very clear market structure shift. A clear market structure shift is this fractal. Higher high, higher low, and then a break of higher low. So over here, we have a market structure shift. Now, to confirm that the manipulation phase is over, so you can see we have accumulation, manipulation, and then distribution. So to measure the manipulation phase and know where it's going to end, you want to use your Fibonacci tool from the last high that was formed to the last low that was formed. And let me just put it like here to make it a bit, okay, let's just make it a bit small. Okay, perfect. So the manipulation phase is usually going to end at -2 and -2.5. Now that is an extra confluence. You don't really have to use this, but if you want real precision, guys, you want to mark out identify the clear market structure shift, okay, before the opening. So this is the open of this candle. Before the open, identify a market structure shift, wait for price to sweep liquidity, and then use your Fibonacci projections. These are the settings. Make sure you copy them. Now, when price is at -2, -2.5, we have swept the 5-minute low. Then you can look for market structure shift, right, on the 1-minute time frame. So from 5-minute to 1-minute for our entry. After that, you look for a market structure shift, you take your entry, and you target the opposing liquidity, or you can use your Fibonacci tool once again, mark out the fib from the last low that was formed to the last high that was formed before the market structure shift, and you can target the -2 of standard deviation. And vice versa for shorts. I'm going to give you guys some examples, and that is going to clear out everything. All right, guys, so here is example 1, looking at gold on the 1-hour time frame, and let's study the 6 a.m. candle. So this is the 6 a.m. 1-hour candle. Again, you want to first mark out the opening price. Once you have the opening price, and when this candle is forming, you want to drop down to 5-minute time frame. Now, once you're on the 5-minute time frame, look to the left side, and you can clearly see we have this high over here. So these equal highs, you could have marked out this high as well, but we have these clean equal highs, and we have this low over here. So we have a low and we have a high to the left side of the open, right? Now we are waiting for price to either sweep out the high or the low. So in this case, the high was swept. Okay, so the high was swept. Now, once that sweep has happened, you want to drop down to 1-minute time frame, and you can simply just look for a market structure shift like this, like a break of structure here. This is a very clean like lower low, lower high, lower low. And again, we have this fair value gap over here that you could have utilized, right? Or you could have entered directly here, because with gold, you're not a lot of times you're going to get like retracement back into the fair value gaps, right? So you could have pretty much just entered around this area, took a short position. You could have used your standard deviation projections like this. Oops. And then you could have targeted the -2 around this area, would have given you 2.13 risk reward ratio, right? But for extra confluence, that you can see that we have to first identify the very prominent market structure shift, or like a break of structure after the open. So we can use like standard deviation projections to measure the manipulation phase, right? So over here, you can see that we have this fractal high over here on the 1-minute, and it is aligning perfectly. This liquidity pool is aligning perfectly with -2 and -2.5. That is extra confluence. It gives you extra confidence that, okay, this could be an A+ setup. Now, you can also add in SMT, but it's not necessary. You can just add it for extra confluence. And again, this played out absolutely perfectly. We catch the accumulation, manipulation, and then distribution. Perfect to the tick. Not made up, guys. You can go and backtest by yourself. Let's move on to the next example. All right, guys, here's example 2, and this is the 5 a.m. candle on the same day. So as I said before, you can utilize every single 1-hour candle. So let's mark out the opening price and see what happened within this candle. So once you have the opening price, let's go down to the 5-minute time frame. Now, once you're on the 5-minute time frame, look to the left side and mark out the unswept most recent lows and highs. So we have an unswept low over here, and if you look here, we have the unswept high over here, right? So in this case, you can see that we swept out the high once again. So now you want to drop down to 1-minute time frame. So now once you're on the 1-minute time frame, you can look for a market structure shift. So we have a low over here. So this is like absolute perfect, like absolute senma over here, guys. We have accumulation, manipulation, and then we have distribution. So we have market structure shift, right? And again, we retraced back into this volume imbalance down here, up here, right? And respected perfectly. It got respected perfectly. You could have also taken your entry from the auto block over here. It doesn't matter. But also, you can see that we have the open here. So let's use our standard deviation projection. So you could have used this right here from this low to this high, because this one candle is a low and a high as well, right? Or in some cases, what I do is I use the fib from the last low to the body of the high candle. So this is the high. So instead of using it at the wick, I use it at the body, and it gives much better precise projections. So again, this is aligning perfectly with -2 and -2.5 as well. So that means that we have accumulation, we have manipulation, and now we are in a distribution phase. So now for the target projections, what you can do is simply use your fib tool from this. And I'm not sure if it went down there, but usually what I do is I just go for like pretty much like 1 to 2 risk reward. And sometimes if the projections are just too big, right? For example, if I use it with the body over here, let's see if it actually, I'm using it with the body, and I'm not sure if price really went down to the -2. Actually, it went really, really close, and I believe it reversed after that. If I'm not wrong, yes, it did. So a good rule of thumb is that if the projections are very far down, especially considering that we are trading the 1 hour time frame candle, and the time window is very small, like you have to be in and out of the trade before that candle ends, right? So if that candle is over, you know, and the new candle opens, your best play here would be to get out of the trade, okay? But if you are near the profit, you just let it, just go break even and let it like play out. Again, it was absolutely beautiful, guys. You can see you could have easily gotten like 1 to 2, or even more, to be honest, if you took your entry from the volume and balance here, right? Put your stop here, and that would have perfectly played out. You could have targeted probably these London lows down here, and that would have given you at least like even like 1 to 3 here, to be honest, guys. You don't need more than that. But that's like showing you how this works. It's not like 100% accurate, guys. There's going to be different variations of these setups. So you have to find out how to play with this, okay? And I've given you like a set of rules. Look for 5-minute liquidity sweep, add in confluence of standard deviation, see if we have manipulated correctly and the manipulation phase is over, and this is what it will look like: accumulation, manipulation, and then distribution. Perfect. Absolute cinema. Let's move on to the next example. All right, guys, here's another example, and we're going to study the 6M candle once again. So over here, and this is from the previous day, I believe. So over here, we have the opening price. So let's see what exactly happened. Let's drop down to 5-minute time frame, right? And notice before the open, so this is the open, right? This is where the candle opens. Look to the left side and mark out the unswept most recent low. We have that low, and we have the high over here, right? So you can see candle opened, it went down, it swept the low, and then it pushed back up. So let's see how you would have entered on the 1-minute time frame. Now you can see that we swept that low, but let's confirm with the standard deviation confluence. So if I go up here, I can see a significant market structure shift, a prominent market structure shift over here. And after that market structure shift, price was manipulating to the downside, right? So we can use our fib from the last high to the last low over here. And you can see how the -2 and -2.5 are aligning perfectly with this liquidity level. That is extra confluence. That is your sign. You are good to go. Look for a market structure shift and get on the trade. So we can see we have a lower low, lower high, lower low. Price breaks above this high. So we have a market structure shift, right? And pretty much you could have also like kind of entered around on the CIST. However, that is a bit risky, but sometimes I do that as well. So over here, market structure shift. Again, as I said before, gold might not retrace back into your PD areas after on the 1 minute, especially because it's too volatile. Okay, so you can put your stop somewhere around here, and then let's use the standard deviation from the last low to the last high. Instead of using it at the high of this candle, I use it at the body to get more precise levels. And you can clearly see that the -2 and -2.5 are aligning perfectly with this high over here, which is the London high. So price goes up, and you could have just gone for 1 to 2 risk reward over here, and that would have given you a beautiful distribution to the upside. So again, right, accumulation, manipulation, and then distribution all happened within 1 hour, guys. This is not made up. You can go and check out, and that is pretty much it, guys. So thank you so much for watching. Hit that subscribe button right now. I got a lot of videos coming out on this strategy, and if you're interested in watching me live trade every single day, there's a link down in the description. Click on it, and I'll see you guys in the next one. Take care and goodbye for now. Mwah.